welcome to a new day to do 55 minutes of current and relevant business talks. This is Business Morning, and I'm Ini John Mekwa. Let's get right into it. We're starting from the global space where oil prices Brent that is drifted lower in Asian trade as investors are assessing risks of supply disruption after Iran conducted naval drills near the Strait of Hormuz right ahead of nuclear talks with the U.S. That's supposed to start today. So we see a deeper red than what we had this time yesterday. For Brent, it's almost 0.5% down, 0.49%, more than 0.5%, 0.79% at $68.11 a barrel. WTI is also down 0.60%, $63.29 a barrel. All of Monday's price action as the contract for both did not have settlement due to, yesterday in the United States was President's Day, so it was holiday and no trading. Many markets are closed today for Lunar New Year. That's in Asia, including mainland China, Hong Kong, Taiwan, South Korea, and Singapore. U.S. President Donald Trump has said that he would be involved indirectly in the talks in Geneva, obviously between U.S. and Iran, adding that he believes that Tehran wants to make a deal, and Trump says that the regime change in Iran would be the best thing that could happen. And then we come to Nigeria and see a very green market. The equities market continues the positive movement, the sentiment spreading to almost all sectors and counters in the equities markets in Nigeria. Yesterday, we hit 183. Guess what? We closed at 190,262.44 in a single day's trade. The all share went up 4.37%. This doesn't look so normal. We're positively abnormal, and it's not every day. It's not common to see. The equities cap has gone up 1.129 trillion naira. That's what happened in the market yesterday. A lot of money brought in, a lot of value gained across the counters. The activity, as expected, was all green. Volume over 1 billion, value 64.03 billion naira, and the deals almost 65,000 deals in one trading session. Something is obviously happening in this market. Top gainers, Jaiz Bank, Better Glass, and Ikeja Hotel, while on the flip side, you have Lotus Hall, Alcy Briscoe, and Deep Cap. Top trades, Access. Access is back. We know for about 2 weeks or more, we saw Access experiencing profit taking, but it seems the reverse is the case now. Investor sentiment has reversed, taking advantage of that drop in the price. Now, yesterday, we saw the volume of trade 86.72 million. O&O also, Zenith Bank. So I guess you can only imagine what has happened in the counters, the banking and the oil and gas yesterday. They drove that positive sentiment that we saw in the market. And talking about sentiment in the market, foreign investor confidence in Nigeria's economy has climbed to its highest level in 5 years and is driven by strong capital inflows, currency reforms, and improved market conditions. This is according to recent data, according to the figures from the National Bureau of Statistics and the Central Bank of Nigeria. Yesterday, we told you about the capital importation, which surged 132.27% to 16.77 billion in the first 9 months of last year, compared with the same period 2 years earlier. The total exceeded 12.32 billion recorded in all of 2024, and it dropped to 3.9 billion that was posted in the corresponding period of 2023. Experts attribute the rebound in foreign confidence to sweeping economic reforms implemented by the current administration and the head of the Central Bank of Nigeria. Another factor that should be driving positive sentiment is Japo Gold. Japo Gold and Ventures PLC, they've delivered and they've started test runs for a pilot gold processing plant at its Libel mine site, marking its transition into active mining after years of exploration and regulatory approvals. The project also supports its mining leases in Taraba, Niger, and Osun states. The company expects commercial production to begin in May 2026 at the Libel mine site, with the pilot plant designed to process up to 21,000 grams of gold every month. A larger industrial-scale facility is planned for the fourth quarter of this year to boost outputs. And the National Revenue Service, the NRS, has launched an electronic invoicing system for medium-sized businesses, and it's part of efforts to strengthen tax compliance, improve transparency, and modernize revenue administration. The rollout targets medium-scale enterprises. This is the second phase. We had the large businesses for the first phase, and it requires eligible businesses to issue and transmit invoices electronically through the NRS platform. The agency says that the initiative will enhance real-time monitoring of transactions, reduce tax leakages, and simplify record-keeping for companies. According to the NRS, the phased implementation will allow businesses to adapt gradually with training sessions and technical support provided to ensure a smooth transition, and larger corporations and small enterprises are expected to be integrated into the system in subsequent phases. One of Africa's largest consumer goods giant, Boer Group, AD Ports Group, and Maya Group of Abu Dhabi have signed a strategic memorandum of understanding to explore collaboration in sugar refining, agro-industrial development, and integrated global logistics. The partnership aims to strengthen regional food security, support industrial diversification, and position Abu Dhabi as a hub for trade and manufacturing. The initiative will combine Boer Group's industrial and logistics expertise with Khalifa Ports infrastructure and AD Ports Group's operational experience. It's aligned with the UAE Food Security Strategy 2051 and Nigeria's agricultural transformation agenda, targeting better production, processing, storage, and export of food products across the Middle East, Asia, and beyond. The founder and chairman of Boer Group, Abdul Samad Rabiu, speaks on the initiative.
I'm confident and have no doubt in my mind that with the skill, the expertise, the commitment, the capacity, and the shared determination of the parties involved, that this initiative will be delivered and will be delivered right. I want to sincerely thank members of the team of AD Ports Group, Amer Group, and of course, members of my team for their vision, dedication, and collaboration to realize this project.
President Bola Ahmed Tinubu has hailed the deal as a historic industrial and trade breakthrough, emphasizing that the partnership will create a sustainable, resilient food and logistics ecosystem, benefiting both nations and supporting long-term food security objectives. And now to the biggest story we had in the economic scene yesterday in Nigeria. Data from the National Bureau of Statistics showed that Nigeria's headline inflation rate slowed to 15.10% in January. That's down from 15.15% in December 2025, and contrary to some analysts' expectations. This marks the 10th consecutive month of easing price pressures. Food inflation, the largest component of the cost of living measure, fell sharply to single digits of 8.89%, driven by lower prices for staples like yams, eggs, beans, and palm oil, while core inflation, which excludes prices of volatile agricultural produce and energy, stood at 17.72% for January. Monthly price changes also declined, showing continued moderation ahead of the central bank's meeting. That's happening next week, very close. And as expected, there have been reactions following this. The first we're going to take this morning is from the Center for Private Enterprise, Promotion of Private Enterprise, that's the CPPE, and they said that the recent slowdown in Nigeria's inflation is a positive development for household welfare, and it signals relief for consumers after months of high price pressures. CPPE notes that easing prices, especially in food and core items, could support a gradual recovery in demand, retail trade, and broader economic activity, benefiting from both urban and rural communities. At the same time, the CPP is warning that sustained lower food prices may put pressure on farmers' incomes, urging targeted policies to protect agricultural livelihoods while maintaining affordability for consumers. Let's get another reaction this morning from the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Ruwani, joins us virtually from Lagos. Mr. Ruwani, good morning.
Good morning, and thank you for having me.
Good to have you, sir. Well, I think the biggest thing that jumps out of this latest inflation number after the controversy of November, December, and January is the food inflation. Food inflation now is on a single digit. And that sounds good, but is it real?
It is real because one thing we have to clearly understand is that disinflation means that the rate at which prices are increasing is slowing. It doesn't mean that prices are dropping sharply. The other thing is that you should understand, that everybody should understand, is that the composition of food, the weight given to food has dropped from 52 to about 40%. Therefore, it is assumed that the amount of money spent on food is actually reducing. But what is interesting, though, is that the highest food inflation was in Kogi State, which is 19.84, while the lowest food inflation was in Ebonyi State, 1.69. Why is this? Kogi is central. Kogi is part of the food basket, but Kogi actually is also the epicenter of insecurity. Therefore, even if the farmers are growing food, they are unable to harvest and transport the food out. Whilst the excess food in Ebonyi, mainly yams and cassava, and brought it down. So the difference between what is 19.84% food inflation in Kogi State and 1.69% in Ebonyi State tells you the distortions that are taking place as a result of insecurity in the country. Two, is that the price of petrol and diesel has actually stayed stable and in some cases declined. So we are seeing 5 things happening at the same time. One, food inflation actually declining, even though as of in the last 2 days we began to see prices increase. Why are they increasing? Because the fasting is about to commence. So we've seen sharp increases in pepper, about 14.29%. Gari is flat. Tomatoes are up 16.67% to 35,000 naira. And beans are up 9% to 60,000 naira. Because from now, for the next 30 days, they'll be fasting. And after that, shortly after that, a week after or 2, you would see the Easter period. So the seasonal effect of food inflation is beginning to reverse itself. I think that's important. But you see, what I'm trying to identify here, or actually exemplify here, is one, that where there's insecurity, food commodities cannot move from farm to market. And that leads to distortion. Therefore, you have high prices in the production areas and low prices in the production area and high prices in the markets. And that's distortionary. Secondly, is that we've seen a quite significant appreciation of the Naira. The Naira crossed the psychological resistance point of 1,400 Naira to $1. That's the first time it has happened in about 12 months. So what does this mean?
But you're talking of the parallel market, Mr. Ruwani, because we've been seeing that. Yeah, we've been seeing that in the official market for some weeks now.
Yes, no, but the official market started depreciating in the last 2-3 days, which means that the central bank is aiming to achieve convergence and to a large extent unification. When that happens, that tells you that the market the exchange rate is on its what we call the real equilibrium exchange rate path, right? So you are getting closer to equilibrium, and therefore you would find when you want the dollars, you get it, and when you need it, you get it at a fair value. So I think that's important to note. So we are at about 1400 or 1395 in terms of, and against the pound also, it appreciated.
So, Mr.
So
Rwani,
coming back to
sorry, Mr. Rwani, before you go ahead with the Naira, I just want to take you back to the food, declining food prices, or at least the rate of increase has declined. CPPE there and some other economists have raised concern about the impact it could have on farmers and farmers' income, yes, and the reaction that could follow that.
Yes, I think one thing in economics we try to explain, disinflation means that the rate of inflation is declining. Deflation means that the cost of producing those goods, right, is much higher than the price they're selling in the market. Therefore, for example, the landed cost of a ton of maize imported is probably about 80,000 naira, while the cost of producing it is about 100,000 naira. Therefore, what happens is that if people import maize and crush the prices domestically, you will find that the local farmers cannot produce. So that is the danger, we call it the deflation paradox, where because inflation prices have dropped so sharply below the cost of production, people go out of business. And after deflation comes a slump, or coincides with that a slump, and naturally that creates a lot of unemployment. So we have to be clear that don't be careful about what you wish for, because you might just get it. So, but now that we begin to see price go up because of the Ramadan fasting, even though people eat only once a day, but when you take the quantum of what they eat, it's more than when they spread it across 3 meals a day. So the actual demand for food increases during the Ramadan period, and that's why you're seeing this.
And you see these driving prices, because after the Ramadan, then you have the Easter. You see these driving food prices.
Definitely, we are going to see that surge in price. And therefore, the central bank, as they meet on Monday and Tuesday, will be looking closely at what should we expect. If you drop rates too sharply, precipitously, you might actually fuel overheating of the economy and actually drive inflation in the wrong direction. So there's going to be a trade-off, a balancing act. And again, the 11 wise men, the Monetary Policy Committee, are going to have to put on their thinking cap and then decide what is appropriate at this time. Bearing in mind that inflation expectations are more important than historical inflation. I think that's
so, Mr. Rwani, I don't know if you saw it. LCCI, I believe it was last week, they did share a statement to say that MPC shouldn't think of holding, they should just think of cutting because of the costs of credit, to them and their members. So I wonder if you think that the MPC would look the way of that statement in any way.
The MPC puts everything together, and they have the primary responsibility of the central bank is maintaining price stability, sustaining the exchange value of the currency, and ensuring that the banking system is sound and safe. So yes, there are interest groups that say from a manufacturer's perspective, yes, bring down interest rates so that we can borrow. There are others who are saying that we need to increase the rate of savings in an economy, therefore increase interest rates. There are the foreign portfolio investors who like what they do, they carry trade, and they want to see that. So when you blend all of these interests, you come up with what we can call the national interest at this point in time, so that the economy doesn't go into overheating, the prices don't run away, and can easily go from normal inflation to hyperinflation in a short period. And we've seen what happened in Ghana and what has happened in some other countries. So I think all of these things will be considered, what we call the major considerations, and I'm sure that the central bank will do the needful. In other words, will ensure that the economy doesn't go into stagflation or hyperinflation while the currency maintains stability. But clearly, if you look at what's happening even in the United States, you find that it is a gradual process. I don't believe that the central bank is just going to rush and cut rates because some people say so. But having said that, let us look at the things that affect our exchange rate, and I was coming back to that when you interjected. One is that we sell oil. The price of oil, as we said just now, has actually dropped. And if there's an Iran-US deal on nuclear, we see the drop price. We also notice that cocoa is down to 3,600. You will recall that 2 years ago, and in fact, the price of cocoa went up to $12,000 a ton. It then came down to $9,000. It is now at 3,600. Therefore, the guys who are living in Ekiti State, Ondo State, Oyo State, and others who were exporting cocoa are seeing their export proceeds fall. We've seen the price of oil come down. We've seen the price of LNG stay little stable. The winter is coming to an end, and therefore, our key export commodities are all moving downwards. So one has to, we have the buffers, we have the safety nets, but we have to be very cautious in overdoing what is right. So I think those things are going to be weighing on things, but generally speaking, at 13.95 and the central bank depreciating the official rate, the gap, which was as high as 95 naira, has narrowed to about 60 naira, the gap between two, and it's expected to even converge further. So that's a good sign that the market is efficient, and the pricing and the value of the currency is closer to its what we call fair value.
Yeah, I'm glad to hear that, Mr. Aaron, because I was actually getting worried when I saw that widening gap up to 90 naira, in January. But I mean, thank God that it's getting closer together. Then the other factor that stands out for the month of January is the Dangote refinery. They accounted for about 62% of domestic PMS demand, producing more than 40 million liters every day. And this is according to the NMDPRA. What does this do to the economy, especially when you look at transportation and all?
It does two great things. One, it guarantees you supply, it guarantees you quality, and it also helps to improve the exchange rate and also to reduce inflation. So what we have normally at this time, because of Salah holiday coming and then Easter holiday, people will be anticipating and queuing up. Now that has happened, they brought down the gantry price again. So by about 25 naira. And so when you take all of this into consideration, you find that it has helped us keep inflation kind of muted. It has helped guaranteeing supply. It has helped also in exporting some of these products to the neighboring countries. And also reducing transport fares. What we've seen recently is that transport fares have been kind of agnostic or indifferent to the price of petrol. So when the price of petrol went up, we didn't see an increase in fares. When the price of petrol declined, we did not see a reduction in fares. So it means that we are probably at what we can call equilibrium price in the petroleum products. But what is important is that it is now clear that government-owned refineries are inefficient and that privately owned refineries are efficient. It's also clear that privatization of state-owned enterprises works for the benefit of the people. Now the question is, how can you translate these growth indicators, these positive indicators, into the welfare of the people? Because people are still hurting. And so we have to now see how growth, how fiscal palliatives and unconditional cash transfers can actually ignite demand and therefore increase supply. So everything looks good, and the PMI, as you can see, is expanding, but we also notice that the amount of money in circulation is actually beginning to decline. That's a good thing in the sense that if money in circulation is declining and money supply growth is actually reducing, then we could say that inflation in the next month or two, right, will begin to decline. And when we looked at the monthly inflation numbers, they all dropped sharply, which means that if you are looking at what inflation was at this time last year compared to this time this year, it shows this trend, but monthly inflation actually showed a very sharp decline, which means that people are not spending that much, even though the prices are increasing. There's consumer resistance because of disposable income is falling.
But Mr. Rwani, don't you see this changing? I mean, we've seen the timetable for the elections, and even you have warned, and the CBN governor also has spoken about it, the possibility of more money in the economy with the political spending that we expect to start, if it hasn't even started.
No, the political spending is increase in money supply without productivity, and that is something we don't need at all. It could be destructive, but the political timetable is such that things are beginning to happen when the congresses of the parties and everybody coming out and lobbying, buying delegates, buying ward men and all. So you're going to see that activity, but that's the price of democracy. It gives you freedom of speech, gives you freedom of expression, gives you the ability to vote, and if the votes are counted, then you will begin to see the benefits of that in the long run. But at the end of the day, what is important is that it's the economy that is going to determine everything. Are the people happier today than they were a year ago? Are they happier today than they were 2 years ago? Are they happier today than they were 3 years ago? So people look at the trend of their prosperity. The opposite of prosperity is austerity. And one thing you cannot pretend to be happy if you are not happy. You could try to fake it as much as possible, but unhappiness comes out there. And the one big issue we face today is the question of power supply. The power supply situation has become totally unacceptable. We are having grid collapses every other day. We are seeing where the transmission capacity is only for about maybe 5,000 megawatts, and therefore failed power and this activity is beginning to become a problem. So if you cannot grow as rapidly as you aspire to grow, you cannot achieve these goals if you don't do something about power. I think there are a lot of discussions around power forbearance, about power incentives, but it needs to be done ASAP so that once the power supply situation is revolutionized, gas, thermal, and more than anything else, renewable energy, then you'll find the productivity growth that we're talking about becomes sustained. All and right. I tell you something, Ini, that it is now cheaper to use solar and renewable energies supply than being on band A and using diesel and using other forms of power. So, and that has happened in Pakistan, and that's happening in many other places. So just watch out for the fact that if people invest in renewable energy, they will not go back to the grid. And therefore, it becomes more expensive for the grid to break even in the future.
All right, so the grid should better listen before we all run away from it. But thank you so much, Mr. Bismarck Rwani, for that. And I guess the subnationals now that have been empowered to both generate and distribute power also have a role to play. But thank you for bringing that up also this morning. Chief Executive Officer of Financial Derivatives Company. Thank you, Mr. Rwani.
Thank you for having me.
Let's take a break now. When we come back, taxes. It's getting to 2 months since we started the new tax regime. What's going on in Lagos State? We'll find out. Please stay with us. back. It's still Business Morning right here on Channels Television. Yes, that's sensitive, interesting matter, the issue of tax, because it has to do with your money. And then when we connect it to Nigeria's commercial capital, you know it is an important conversation. That's why we're doing this morning with a special advisor on taxation and revenue to the governor of Lagos State, Mr. Abdulkadir Ogungbo. He's here. Mr. Ogungbo, good morning and welcome to the program.
Good morning. Thank
How's
you.
it been with the new tax law?
Yes.
So many sides to the story, the true, the false, the ugly, the manipulated, and
Yes,
how's it been?
it's just funny, and you can't really blame people because before this very bold step, it takes us a long time to have a reform like this, a very robust, inclusive, that touches almost everyone in a very, very positive light. So a lot of people will be, agitated because they feel that, and when you look at the time that will take in educating or correcting the misinformation, and that's not also good for our people. If you don't have basic information, it's better you come to the people that can give you that information. So rather than disseminating or misinforming the people, which
I guess you're referring to the video of someone whom a lot of Nigerians respect, who came out to say that the new tax law hasn't started yet, that is going to start by 2027. Perhaps you want to correct.
So many misgiven and misinformation out there. And today,
has the new tax law started?
Yes, because immediately it's assented to by the president. It means it presupposes that it has started. So, and now the workings. So tax is expected to be filed or rated based on the previous or outgoing year. So the rate for 2026, so we're actually, the 2026 is the ensuing year. So that is when you are expected to file all your returns that you have done in 2026. And that is why Lagos, in 2025 and coming to 2026, to file what you have expended or your activities, financial activity in 2025, in 2026. So saying that it has not started, of course, I don't know where they are getting that from.
Okay, so states are supposed to domesticate the new law. What does a domesticated tax law look like in Lagos?
Yes, beyond the legal conversation of taking that bill, Joint Revenue Board, the new established Joint Revenue Board, is saddled with the responsibility of putting the bills together before now. When it's passed, every state needs to take it to their House of Assembly, in our own case, Lagos State House of Assembly, to now sit on it, debate it, and domesticate what you have in alignment with what the GRB has been able to do. So what does it mean in context, in a broader context? It means simplicity. It means harmonization. So when you say simplicity, it means that every gray area that hitherto were not too clear to our people, Lagos is now making it clearer. So we're going to be talking about how we're exempting those that are below the pyramid, those, what is the rules on our rental income, what is it that we are doing about harmonization, what about unified standards, what do we have to do about our own integration, and the templates for integrating or collaborating with our third tier of government, which is local government. So in our own case, the implementation means that all tiers of government need to work together, not necessarily centralizing, but rather ensuring that whatever the GRB has recommended and passed is also domesticated in a manner that everybody understands and we're able to, implement it successfully.
So I like the rental part, because that's the question a lot of people have come to ask me and I've not been able to answer. So I really appreciate that. But before we go there, you organized an event in December. I met you there. The governor was there. And I remember speaking with the governor afterwards to say one of the biggest worries of people who are operating business in the informal sector especially is the non-official actors, the guys on the road. I mean, when you're coming from Berger, you see them a lot with the trucks, and these trucks are carrying food, which is supposed to serve the populace. So eventually, whatever money they're collecting there goes back to the consumers. And the governor did promise that working with the local government, which you just mentioned, you're going to get these guys off the streets.
Yes.
They are still on the street anyway. Is it too early to expect? But what's going on?
Yes, thank you. Yes, when I try to explain what we are doing, so number one is we're trying to adopt, first and foremost, the Joint Revenue Board position of harmonization. What harmonization means is that when a truck leaves Kebbi and is coming to Lagos, you only take one payment from that truck.
At what point?
Point of loading or at discharge, but in this case, point of loading. So that ticket or a bill is now showed efficiently because you don't need to have anybody on the road again. At the back end, the states are involved, will be shared in any way. They have NRS and they have Federation, where the money is collected on behalf of states, now shared it at the end of the month at our FARC and whatever. So now, coming to the promise of Mr. Governor. So Mr. Governor has directed that all stakeholders, local governments and state government, need to work together. So we have interstate borders and we have intrastate activity. Our own intra is, for instance, when you lift a good from, let's say, Apapa to Ibejileki or Ekpe, you are likely to meet 5 local governments. So we are talking to local government to harmonize. So when we're talking about our own harmonization, what it means is that the collection, where necessary, that after being recommended by the Joint Revenue Board, which we are trying to domesticate, means that we're not going to be charging our people at multiple points again. So, and this, you should expect the result very, very soon. So what are we doing around that? 1, we are harmonizing. 2, we are integrating the system to say that when X amount is collected, every organs that need to share it need to be transparently notified that 2,000 naira, 10,000 naira has been collected. 3rd, collaboration. We need to talk together so that some of these people you're calling non-state actors, in actual fact, some of them are acting on behalf of a recognized body. Like a local government want to earn or generate more revenue, they send people out. So we understand that fact. So Mr. Governor says that don't overrun the government because federal government is not overrunning state government. So try to engage them. So we engage them like you met them, and we've had several engagements as well. So we're going to be collaborating with them to do this together using one system. And finally, engagement. Engagement of both state actors, so to speak, and non-state actors. That this is not good for a state like Lagos. This is not good for our vision. This is not good for our positioning. This is not good for what we are doing. So when you engage that, you put a system in place, you collaborate, you engage, and you also use the law by way of enforcement. Anybody that goes against this, haven't gone this route, then it means that the person is waiting to see the route of the law. So, and that's what we're doing.
So we can expect that soon.
Soon, very soon.
I mean, to be realistic, these things have been happening for a long time. So it will take time to get them off the road. But at least by December this year.
Yeah, we should be able to
we should be able to see the result.
Yes.
Okay, so please do explain to me the rental income part in the new tax law. What's that all about? Some landlords say they might have to increase because they are paying to the government now, so they add that to their existing rent, and at the end of the day, it's still the tenant that is paying.
One very interesting thing about this tax reform is the people at the bottom of the pyramid, people with low income, and that reflects or evident in the threshold for tax payment, the threshold for SMEs from their a turnover of 100 million below, and 250 worth of assets, million of worth of assets. And also, this relief also goes to tenants. So landlord may want to say that, why are we at the receiving end? So the point is this: taxes, withholding tax or whatever that you have paid on your rental income is not final tax. What it means is that you can get a refund from another form. But what the president wants to happen is, once a tenant declare, don't forget the root. The root is that you must file your returns. When you file your returns and say that I have paid rent, X amount of rent, 2.5 million below, you are going to get 500,000 relief from that 2.5 million. So, and it means that 20% of your rental, of your rent is now going to be relief for you. That's what it means. Then anything above 500,000 will not be, is capped at 500,000. So to a landlord, landlord is expected to declare the income from rent, and you pay 10% or lower if you have other. If it is only that income, you may be exempted, from that initial payment. But subsequently, maybe people with about 4 or 5 properties, so you pay effective rates on all of that. So in summary, rental income favors tenants more because you are going to be relieved with about 20%, and you're going to tell the authority where you have paid your rent to before you can enjoy that benefit.
For a salary earner,
Yeah.
whose tax is removed from source,
Yeah.
by the employer, what does the scenario looks like?
So when you have been employer has deducted your pay as you earn, so as it were. So then when you're filing your returns, you get a relief from that rental income. From that rent. I call it rental income. I say from that rent that you have paid. So they are not related, especially when you are meant to file returns and get relief. Don't forget that when a tax authority sees you, it sees everything about you, your social status, your bank statement, and co. So there is no hidden place for the authority. So when these things are put together or juxtaposed, so then you can get relief where necessary or refund where necessary.
Okay, well, I think that, Mr. Ogunbagbo, we're going to have you back, God's grace, because it's obviously a continuous thing, and there's the need for understanding and enlightenment, and most especially when those guys are off the road. We'll have you back. At least come and boast. We don't mind.
Yes, we're going to do that. But with the effort of the local government chairman, all MDAs involved and co, I'm sure we're going to get that sorted.
Thank you so much for coming on the program. Special Advisor on Taxation and Revenue for Lagos State Governor, Mr. Ogunbagbo Abdul Kabir. Thank you so much.
Thank you.
All right, now it's time to go global with Laddie Williams. Laddie, it's on you.
All right, now let's get a check on what's playing out in the global space now. Fresh labor market data that was out to the UK and showed that unemployment rate edged higher in December, signaling continued softness in the jobs market, with wage growth also, moderating. Well, joining me now to unpack this, we have Juliana Olayinka as a London bureau chief. Good morning, Juliana. Great to have you. Hello, Juliana. Okay, so, with inflation, that's unemployment in the UK there, rising 5.2%, wage growth slowing to 4.2%. How's this data being digested over there?
I think that what we're seeing now is more than just a sort of normalization in the UK. It's the labour market clearly starting to soften. I think the sentiment that where people are expressing on social media is clearly being seen in the data, especially according to the Office for National Statistics, because they've released unemployment data showing that it's at 5.2%. And I think if you take that number universally, it looks quite low, but that's the highest that we've seen in the UK since the pandemic. And wage growth has also slowed, as you said, to about 4.2%. And the private sector is even showing lower pay figures. And that basically tells us that hiring demand is easing and pay pressures are starting to come off. Now, I think there are two major things that are driving it. I think, first of all, it's got to be AI. Over the past couple of months, we've been, recording and reporting about hundreds of big corporate organizations laying off staff. I think particularly in retail, anybody who goes shopping in the West, most of the time when you go to the checkout, you're not speaking to a sales rep now. You're putting all of your items into a monitor by yourself. And, these are affecting real-time people. And we can see that in the figures. Also, I think in the UK, what's quite peculiar is, of course, Rachel Reeves and the Labour government. During their last budget, there were lots of tax hikes for employers. So it's costing employers more to keep people. Payroll taxes went up, minimum wage rose, and I think businesses are clearly responding by slowing recruitment. And I think what's more worrying about this data is that you can especially see among younger workers, employment is really slowing down. So those who are at university, usually they'd have a part-time role, but now that part-time role is being taken over by an AI bot. I think it will be quite nervous around Downing Street at the moment.
Right, AI and jobs. We keep talking about those two, at this point. But, given this softening in jobs and pay pressures, how likely is a March rate cut, from the Bank of England? And what could that mean for, the sterling and gilt yields?
Well, of course, the data feeds directly into the interest rate story, which is what most business hacks are talking about in the UK this morning. I think it certainly strengthens the case for a March cut from the Bank of England. I think markets were already pricing in about a 3/4 chance of a move, and policymakers have been waiting. But I think this softer jobs data and ease in wage growth accelerates that impression. Now, the bank held rates at 3.75% last time, but not every deputy governor agreed. But Andrew Bailey has said that there's room to loosen policy this year if demand keeps weakening. So I think that's kind of what we're seeing. Now, since the data was released this morning, we've already seen the pound dip. So I think some easing in the gilt yields is likely.
All right, so away from the data now, we got that news yesterday that China, they've decided to grant, visa-free travel to the UK and Canadian nationals. How's this being received in the UK?
Yeah, I think it's quite positive. I think anybody who travels to China will love the idea of not having, to queue for a visa, right? Nobody likes going to those visa appointments with a prospect of being cancelled or not being given entry. So I think this is quite a good thing. But of course, it's still very, very political. And this is all part of the takeaways, or some would say non-takeaways, that the Prime Minister, Sir Keir Starmer, got following his meeting with Xi Jinping a couple of weeks ago. And actually, that new move begins today. So from today, the 17th of February, UK passport holders can enter mainland China for up to 30 days without a visa. And of course, this has been a huge, big barrier. And it's a very costly application process, as I've said. So in a commercial angle, this is seen as a good thing. I think according to data, tour operators are already reporting a surge in inquiries. But then, like I said, that it's so political. In fact, we even discussed this on my business show, Channel Business Global, last week, because there are still British nationals being held by China, and a lot of British MPs didn't think that Keir Starmer came away with enough to restore those frosty relations. So some would see this as a win, but others will see this as not enough.
All right, not enough. We'll keep tracking that one. Every country now trying to make deals at this point. Thank you so much, Juliana.
Thanks, Laddie.
All right, let's get a check on other stories now. See, Japanese government bonds have extended their week-long rally following a strong 5-year note auction that reinforced investor confidence amid easing concerns over rate hikes, fiscal risk, and inflation. Super long bonds led the gains, with yields on the 20 to 40-year maturities falling by at least 10 basis points, while shorter dated yields also moved lower. Demand at the 5-year auction improved for the first time since September, signaling renewed appetite for Japanese debt. And Chinese tech giant Alibaba has unveiled its latest artificial intelligence model, Qwen 3.5, marking a major step into the so-called agentic AI era. The company says the upgraded model, designed to perform complex tasks autonomously and handle visual and multimodal inputs, is significantly more efficient and cheaper to run than its predecessor. The move underscores intensifying competition in China's fast-moving AI landscape, with domestic rivals and global tech leaders alike racing to develop more capable and cost-effective AI technology. And Goldman Sachs, they've lifted its Australian dollar forecast, citing a more hawkish stance from the Reserve Bank of Australia as a key driver of currency strength. The global bank now sees the AUD-USD climbing in the coming months as markets price in continued RBA strengthening and tightening, underscoring diverging monetary policy expectations against the US dollar. And to the big investors now, Cathie Wood's ARK ETF disclosed its trading activity for Monday, revealing a continued reduction in its position in Discovery Limited. The ARK-F fund sold 52,187 shares of the South African media company, worth about $10.5 million, as part of a broader trend of divestment from the stock. The move comes after additional sales late last week, underscoring ongoing adjustments within ARK's portfolio strategy. And those are the top stories right there in the global space.
Thank you so much, Laddie. And just as we head out off the program this morning, we'll take you to the market, where market is still surging. The green sentiment is what's dominating. And right now, the market is up about 0.72%, crossed over to 191,650.37. That's for the all share, more than 1,000 basis points added already. And well, we see profit taking in on Access Holdings, but Japan Gold, remember we told you Japan Gold has started testing for gold processing. That's driving investor sentiment towards that. So it's almost 10% up, even as early as now. Okomu is also positive. Unilever, Airtel Africa waking up from after a long time. Score Nigeria also. But on the flip side, we see Geregu still experiencing a lot of profit taking, as well as Total, Nigeria, Unicel, and Corn Oil. Those are on the red side of the market at this time. We'll see what the numbers look like at 1:30 when Laddie Williams will be back for Business Incorporated. I'm Mini John Mepadu. Have a great day.